I'd always sort of been envious of the people who'd worked on the original Mac Lisa or the early iPod or had been around for the early internet. Legendary stories. And then had this thought that it's possible that Bitcoin is going to be one of the most important developments. If there's a few chapters in the history textbook, that Bitcoin's going to actually show up.
All right, sir, thank you for doing this.
Yeah, absolutely.
I appreciate it. To start with, can you please tell me your name and what you do?
Sure. I'm Hunter Horsley. I'm the CEO and co-founder of Bitwise. Bitwise is a large digital asset manager. We manage about $12 billion of assets for clients.
Very, very nice. We'll get to Bitwise in a second. But first, could you tell me what you were doing before Bitwise? What kind of led you to your position now?
Sure. Before Bitwise, I was a product manager, so working on software at Facebook and Instagram, working on advertising products and the like, and kind of got to see a few things at Facebook that gave me the mindset to recognize, I think, the importance of the advent of Bitcoin and public blockchains.
What did you see?
So at Facebook, you could sort of firsthand witness, I think, three things. One, the incredible scale of the internet. Around that time, Facebook crossed 1 billion users, and that feels boring, and everyone knows that by now.
Was that 2015?
Yeah, around there, exactly. Yeah, and that was remarkable at the time. And you could travel different parts of the world, and people had Facebook, and you could just see the incredible scale of reach of the internet. So you could see the scale of the internet. The second thing you could see is if you're building products inside of a place like Facebook, that it's easy enough to send messages and images, but if you wanted to go a layer deeper and build something in financial services or payments or e-commerce, it became very fragmented. The world became much harder to navigate. There are 177 different countries, languages, standards, and the like.
Rules and regulations.
Sets of banks, currencies. So you could see that even though the internet had really opened up awareness and connectivity, it's still very hard to do a lot of things globally on the internet. And then the third thing you could see at Facebook, and I think in part because of Facebook, was people were losing trust in business leaders and political leaders.
Right.
And I think what Facebook did is it gave everyone a blog with 500 readers, their friends and their family. And that transformed the conversation a bit, because previously people were just hearing about what was going on in the world through broadcast television or radio or the New York Times. And that was one version of events. But suddenly everyone has the opportunity to tell their side of the story and their perspective. And over time, I think that really caused a lot of people to question the narratives or the institutions that for decades they had placed their trust in. So you could see that happening. So you could see the scale of the internet, but the challenge with the fact that you still didn't really have global standards. And you could see how people's trust was sort of declining in this age of the internet. And against that backdrop, you witness something like Bitcoin, which takes advantage of the scale of the internet. It says there's going to be one global standard for everyone, regardless of where you are. And it addresses the declining trust in institutions by getting rid of the institution, getting rid of the leader, getting rid of the corporate actor. And to me, you could see why 20 years into the internet, that was something that made sense and could be important to the rest of the 21st century. So that really, gave me, I think, a mindset to appreciate, not without its flaws and risks at the time, but appreciate Bitcoin.
It's great. So obviously you became aware of Bitcoin before that time?
I was, I bought my first Bitcoin maybe in 2014 or 2013 or something like that. But I didn't think that much of it. I think almost everyone has to go on a similar journey of hearing about it, not remembering, not paying attention, hearing about it again, being skeptical. Maybe you buy some, but you don't think a lot about it. And I had bought some in the past, but really didn't think anything about it at the time.
Yeah. I love the way that you had this conceptualized in your mind about scale, like fragmentation and reputation kind of thing. Why did that lead you to, so then that, from that revelation, you started Bitwise? Was it like,
Yeah, well, so from that perspective, we thought this is a really meaningful thing. And this was end of 2016, early 2017. This is a really meaningful thing happening in the world. And, myself, my co-founder Hong, who is a software developer, thought, this could have a place in a history textbook. This is a big idea. And I'd always sort of been envious of the people who'd worked on the original Mac Lisa or the early iPod, or had been around for the early internet.
legendary stories?
And then, had this thought that it's possible that Bitcoin is going to be one of the most important developments. If there's a few chapters in the history textbook, that Bitcoin's going to actually show up. And we wanted to contribute in some way if we could, but we didn't know how.
Yeah, that's what I was going to ask.
We didn't know how. So we just were talking to people about Bitcoin and crypto. And a common refrain we heard from people back in 2017 was, and these would be friends.
Silicon Valley, like tech people?
Yeah, we were out in San Francisco. It'd be friends in tech at Google or Facebook, but also friends. I had gone to the Wharton School. I had friends at
East
Goldman
Coast,
and Buyside. And a common refrain was, I'd like to buy Bitcoin or crypto, but I don't have time to figure it all out and be constantly monitoring it. And we heard that enough times from people who are incredibly tech savvy and incredibly financially savvy. And we just thought, maybe that's a problem that somebody needs to focus on solving. And much of what was available in 2017 were apps like Coinbase, exchanges, trading venues, infrastructure for hedge funds. But the way that many people access asset classes, you could say, well, how does that person from Google invest in municipal bonds? That's also pretty complicated. How do they invest in real estate? That's also pretty complicated. The answer for a lot of people is that they use asset management products, and often they access it via a financial advisor. And we looked around and said, there's nobody who's working on making that possible. And that's a big undertaking. And that might be a company-sized problem. And so that was the basis for us saying, we should bring a company together to try to tackle this. And we started Bitwise.
Very, very cool. I imagine at that time, from the crypto native perspective, I think you probably got a lot of pushback on that, right? Because while Bitcoin maximalism has waned definitely over the years, I remember having similar views as you during like 2017. Like, my mom is never gonna have a self-custodial wallet. It's just not ever gonna happen ever, right? Like, she's a smart lady and all this kind of stuff, but she needs somebody to help her with this, right? Man, and all my friends in crypto were right.
All right, so what I think is going to happen here is that people are going to have multiple. I mean, the reality is, if you just think about cash for a second, you have paper cash that you use in some cases, use a credit card in other cases. Sometimes you use a wire, sometimes you use ACH, and sometimes you'll put it in a money market fund.
Yeah.
And all of those things can be true for one person. And so I think similarly with Bitcoin, some people are going to hold some in a self-custodial environment. Some may hold it in a retirement account through an ETF. They may hold it through a financial advisor. I think what's important is that people have the options so they can do what they want, where they want.
Exactly.
And I think all of the options reinforce each other. Maybe you have a relative who will buy Bitcoin for the first time through an ETF in a brokerage account, and that'll make them curious to learn more about Bitcoin, and they'll start talking to people about it, and ultimately they'll learn more about it, and they'll want to have a self-custodial wallet as well, where they have possession of the asset. So I think these things will all coexist, and the beauty of this space, and what you can see at this conference also, is that there are just more and more solutions for people. The space is maturing. It's becoming easier to find a way to do what you want to do the way you want to do it.
Yeah. I agree with you 100%, but I would say I'd probably even more extreme in terms of, I think for most people, it'll be custodial, but the fact that a non-custodial version will always exist is ridiculously powerful,
Very powerful.
right? Because it keeps major players in check.
Yes.
Right? It's a undeniable check
Yes.
on that authority. And while I think for most people they won't really use that very much, the fact that it does exist, and for people like me, who I'm basically only non-custodial.
Yeah.
It's a powerful thing.
It's a powerful thing. And also for some people, it may be a choice not between, do I want to put 25% of my money into Bitcoin in self-custody or through an ETF, but it may actually be a choice between, I'm not comfortable putting 25% of my money into Bitcoin if I'm responsible for securing the assets myself, for figuring out the estate planning myself, for making sure the inheritance is organized, for making sure that any taxes are addressed. So I'm just going to buy a little bit. But if they can, for some people, if they can access it through a means like an ETF that simplifies a lot of those things, then they can actually buy more and express their view more significantly. So I think it's a great state of play that, as you said, in Bitcoin, people have a lot of options and can set themselves up however serves them best.
Excellent. Yeah. All right. So let's focus on Bitwise now. You said it's a crypto asset management firm.
Yes.
Please.
You nailed that.
Yeah. So a lot of our audience is primarily crypto native.
Sure.
Can you explain that
Yes.
TradFi
Sure.
techno speak, please?
Sure. Absolutely. So I'm going to take two passes at explaining it.
All right, cool.
The first pass is you could think of us as doing what BlackRock does or what Blackstone does. The second pass is our clients, our investors. These are people who are smart, they're busy, and those investors want to do certain things. They want to make certain investments or accomplish an investment objective. And then they work with Bitwise to help them do that, to give them leverage on their time, to manage it professionally. So an investor might say, I want to buy Bitcoin in my retirement account for the tax advantage of doing that. And Bitwise has a Bitcoin ETF that allows me to do that. Or they may say, I want my financial advisor to buy the Bitcoin and manage it. And I want Bitwise to talk to my financial advisor and support my financial advisor learning about it, monitoring it. Or they might say, I hold some Bitcoin and I want to generate yield on it. And Bitwise can generate yield through staking or derivatives on my Bitcoin for me. Or I want to stake my Bitcoin, which is a sort of a new phenomenon. Bitwise can facilitate that. And in working with Bitwise, they have solutions for these things, but also there's somebody I can email, somebody I can call, somebody who I know. Today is 110 people who are talking to everyone, all the counterparties, focused on informing me about things I want to know, but also protecting and stewarding my assets. So an asset manager serves the investor who's busy and helps them accomplish their investing goals through products and a relationship that gives them leverage on information and professional management.
That's perfect. I love that. I'm going to use that in the future. Serves the investor that is busy.
Yeah.
And I think for a lot of people in the crypto industry or the crypto bubble who spend a lot of their time on the technology, use the technology a lot, they might scoff at that, like, oh, but I can just get on Aave and generate yield or bridge to this chain. It's trivially easy.
Yeah.
I personally have noticed the power of this as I've gotten busier.
Yeah.
Right. I have kids. And I'm busy with work.
Yeah.
And so I've noticed that my financial transactions, trading and DeFi, moving things around has gone down drastically. And having somebody do stuff like that for me on my behalf is better than not doing it at all.
Not only that, but it's the job of people at Bitwise to be doing it 24/7. So even if somebody's very good at it, maybe they want to go on vacation one week and something happens in the markets or something happens with the technology. It's our job to provide reliability there, to recruit really talented people to do it. So I think it can be a great solution for leverage on people's time. And then the reason that we built this firm from scratch is because our view is you want to build from a clean sheet of paper the different technology knowledge and investment management knowledge and assemble a team that is specifically well situated for this asset class and that has the ability to just focus on this asset class. They don't have competing priorities in bonds or credit. So that's that's what we're trying to do at Bitwise.
You preempted my next question, which was going to be pitch me on using Bitwise versus BlackRock or some other asset management firm. So obviously it's because you specialize. One key benefit would be that.
Yeah, I mean, I'm so glad that BlackRock is in the space. I think they've done huge things to make it less taboo for a lot of investors to buy Bitcoin or consider Bitcoin. And there are a lot of great asset managers today. So I think that an investor has a lot of good options. They don't have to work with Bitwise, and they should do whatever is best situated for them. I think some reasons people work with Bitwise because, I mean, there are people at Bitwise who worked at BlackRock before. It's not, we have an incredibly talented group of people, but they like the specialist focus, knowing that there's no other priorities. Sometimes they like a solution that we have.
Like staking Bitcoin. BlackRock doesn't offer that, do they?
I couldn't say, but I suspect that we will always do more to support what a client wants to do, just because it's the only thing that we're working on. And sometimes they like having the relationship with the firm and the access to the information and so on and so forth. So I think this is not so dissimilar. People may not be as familiar with this, but BlackRock is the biggest asset manager in the world. Huge and incredibly professional. They manage credit investments for credit investors. So does Apollo. So does Ares. It's the way this works is not that there's only one right answer. It's that people decide which partner makes sense for them. So I'm so excited that BlackRock's in the space because I think it's really leveled up again the ability for many people to engage with the topic, and they're very professional. So, I think a challenge of our space over the years has been that some of the firms and businesses and products, people really have worried about them for good reason. And
2022.
Yeah, and we want the industry to get out of the way of the asset, and if people are investing in Bitcoin, the biggest risk shouldn't be the company you did it with.
Right.
I think they and others have really helped professionalize the industry as well.
So Bitwise obviously was in the space before the spot Bitcoin ETFs got approved. How has that approval changed how you do business, or have you seen just a step function up in terms of
step function up?
Yeah.
Step function up. Yeah. So we're managing $12 billion of client assets today. I think 2 years ago it was 1 billion.
Wow.
I think that the Bitcoin ETF was two things simultaneously. There was a meta thing, which is you have a regulated product for investing in Bitcoin, and that symbolically to people just indicated that the space was becoming safer and more mature. And I think caused a lot of even people who saw that a Bitcoin ETF was approved, but then bought it on Coinbase.
Oh, I see.
They symbolically saw that the space was maturing.
Yeah.
So I think just symbolically, the ETF has done a lot to mature the profile of the category. Then specifically, the ETF, of course, does a lot of things for investors. Our ETF is very low fee. It's 20 basis points, which is very cost effective. And it creates a lot of peace of mind for investors. You have a qualified custodian. You don't have to worry about getting hacked or chased down. This is an institutional qualified custodian that we're supervising and diligencing. Then the books and records are kept by Bank of New York Mellon. So you have a third party confirming the amounts. Then KPMG audits all of that. Then we supervise it all. We trade at an institutional level to get basis points of cost on execution. And then on top of that, you have securities laws. So there's a lot that can give an investor peace of mind. And then finally, the ETF is just very easy to access. if you have a financial advisor today, you can ask them to buy it. That's pretty easy. That's you're a phone call or a text message away from doing that. Or if you have a retirement account that has a tax advantage, it was very hard to put Bitcoin in that retirement account.
Right.
Now it's much easier.
Yeah.
So it's really opened a lot of doors because of the capabilities, and symbolically, I think, has really contributed to leveling up the space.
So I imagine the spot Bitcoin ETF is your most popular product.
Yes. and we manage one of the largest Bitcoin ETPs in Europe as well.
Okay.
So we have one of the largest in the US and one of the largest in Europe.
Is that 1 and 2 then, in terms of your overall most popular products?
If you rank them by AUM, it would be our Bitcoin ETF in the US, and then probably a tie between our Bitcoin ETP in Europe and the Bitwise 10 Crypto Index Fund.
Okay, that's what I wanted to talk about.
Which is about 75% Bitcoin.
Yeah.
But yeah, so those are probably the three largest.
So I wanted to talk about some of these fund products, right?
Sure.
Like, so can you tell me about this second, is it the top 10 you said?
Yes, it's called the Bitwise 10 Crypto Index Fund. So there's the Bitwise Bitcoin ETF, the ticker is BITB.
Yep.
There's the Bitwise Physical Bitcoin ETF in Europe, the ticker is BTCE. Then there's the Bitwise 10 Crypto Index Fund, the ticker is BITW. That strategy is for an investor who says, I think Bitcoin has an important role to play in the world. And I've heard that there's all this other interesting stuff going on. I just don't know how it's going to play out. I have a friend who says Bitcoin's the only thing that matters. I have another friend who says that there's this thing called Solana that's changing the world. And I don't really want to decide. I haven't decided which tech company is going to be the most important tech company over time. And so for that, an investor with that view, the Bitwise 10 Crypto Index Fund allows them to express that view without having to decide. If Bitcoin ends up being the most important and only valuable asset, then the fund will hold almost 100% Bitcoin because it'll continue rebalancing. And today it's 70 or 75% Bitcoin. And if it ends up being the case that Bitcoin's very valuable, but other things are valuable too, then you'll hold 70 or 60% Bitcoin and you'll hold those other things. So if friend A is right, you'll wind up owning a lot of Bitcoin. And if friend B is right, you'll wind up owning a lot of Bitcoin and some of the other things. And so it allows you to be positioned for both possibilities, which for some investors is an easier way of investing than having to decide how the future is going to unfold.
Right. I imagine as Bitcoin dominance increases or decreases, that changes the
That's exactly
balance.
Right. Yeah, that's exactly right. Yeah. So
fund, yeah.
Today it's about 70 or 75. I'd have to check. It's on the website, of course.
Of course.
And then there's a lot of other interesting things that are emerging in the space. We now have an ETF that tickers OWNB as in own Bitcoin.
Okay.
That holds an index of the corporations, the public companies that own Bitcoin on the balance sheet. And that's a really new phenomenon.
Right. Strategy,
Metaplanet, Nakamoto. There's a bunch. Similar. 21. So that's another interesting dimension for some investors. So OwnB is an index of companies that own over 1,000 Bitcoin on their balance sheet, and is another solution for some investors. We now have ETFs that generate income in the space. So for instance, there's an ETF that tickers IMST that writes options on MicroStrategy stock, strategy stock, and uses that to generate income for investors to harvest that volatility. So all of that is to say, as I said earlier, our job is to make it possible for investors to participate in whatever opportunities they want to access and to professionally manage those things and be available to them.
Yeah, and their risk tolerance and where they are in their life and all this kind of stuff. Yeah,
there's a lot. Every investor is different in terms of what makes sense to them.
Right. Yeah.
But we have today we have over 20 different investment solutions. So it's a lot.
And coming from my angle, working on my computer, doing all this had been lacking in the crypto industry for a long time.
Yeah.
Right? Especially to where it is today. All right. So my last question is about ETFs in general. So I interviewed Eric Balkanis with Bloomberg in Dubai. Awesome guy.
Yeah.
But the thing that absolutely blew my mind was I interview a lot of Bitcoin L2s and crypto native products that are creating yields and there's a lot here, like Babylon and Core and all
Yeah,
these
yeah,
things.
yeah.
And they, WBTC, CBBTC, anyway,
Yeah.
they all have been so confident saying that they're going to outcompete the ETFs because they're more agile, they're crypto native, they can move faster, and they can basically be more cutthroat and always stay ahead. And I told this to Eric, and he was like, I don't know. I think crypto people, they underestimate how powerful ETFs are, right? And how ETFs reshaped traditional finance because they are so efficient and work at such scale. And he warned me. He was like, you need to be a little more, crypto industry, you need to be a little more humble about this, not an opponent, but like competitor is, right? And I think I was also arrogant too, right? Like I come from crypto, so it's like, yeah, we can do it better than traditional finance can. And now I'm not so sure. And as I've gotten into the details, boy, the ETFs seem like they're just, like you said, like down to basis points, right? And I was wondering what you thought about this dynamic between the crypto upstarts who are trying to compete in a similar space compared to like the spot Bitcoin ETFs.
It's probably an unsatisfying answer, but I think that both are going to do better than people imagine. I think that the on-chain capabilities are going to flourish wildly. And I think that some of the vehicles like ETFs, we have private funds, those will also do fabulously well. I think that it's true, as Eric says, and Eric is an expert, that the world is very comfortable using ETFs to express views. It's also true that more and more people are learning how to self-custody, how to interact on chain, and I think that trend will continue. The reality is that I suspect we'll live in a world with both. And to harken back to my prior analogy, you could say ACH has no fee. Why does anyone send a wire? Or, the credit card is so easy. Why does anyone use ACH? Or the check is so clunky. Why doesn't everyone just use a credit card? I think the reality is that in different circumstances, different things will make sense. I think you're going to see more and more on chain and more in ETFs. One thing that I think people can help people understand what they're seeing with ETFs is just to understand the capital markets in the US. So individuals investing their own money in the US is about $10 trillion, often called self-directed or self-directed retail. Financial advisors who use vehicles like ETFs, mutual funds, SMAs, is about $30 trillion. Endowments and foundations is about $3 trillion. Hedge funds is about three. Pensions are about 30. So it is also the case that to answer the question of will more and more happen on chain or will it happen through ETFs, it also depends on which of those constituents you're talking about. Because not only does every individual have slightly different preferences, or maybe they'll use multiple things, but each of those constituents also has different considerations. So the punchline of it all, nobody needs to solve this Rubik's Cube, but the point is more
Yeah.
of both.
Right. So like a rising tide raises all boats.
I think so.
Yeah.
And I think you'll see more people learning how to self-custody and be on chain, and more people wanting to own Bitcoin and using the ETFs.
Yeah. Well, I only say this because I like to, if I was not surprised by it, I know a lot of people in crypto, at least on my side of things.
Yeah.
And I think that we were, or at least I was, not taking it seriously as the ETFs are, right? And they are deadly serious, right?
It's built to bridge, crypto has been living on a small to medium sized island, and the ETFs have built a bridge to a continent.
Yeah.
I think they've had a huge role to play. And I'm excited because, you mentioned being from the crypto community. I think everyone at Bitwise, 110 people, is striving to sort of be a member of the crypto community and a good steward of the space. It's a reason we do some of the things we do with core developers. while also building those bridges.
Yeah. Can I ask you one last question?
Of course.
Just because you just reminded me of something. So I also work in the news, and I've noticed in the last 12 to 18 months, Bitwise analytics has like really ramped up in terms of the number of times that we cite Bitwise in news articles has just kind of gone up a lot.
Yeah.
And my writer friends and I often comment on it, like, this seems like very deliberative, that you're releasing more analytics.
Yeah.
You're trying to get out in the space. Number one, is that true?
Yeah.
Are we noticing a real phenomena? And then why are you doing this?
Yeah, it is true. We're doing. I mean, there's two answers. First is the firm has grown. So 2 years ago, maybe we were 40 people or 50 people. Now we're 110. So there's just more. The research team has grown. Incredibly talented. Matt Hogan, our CIO, Ryan Rasmussen, Andre Dragosh. So there's just more capability there. And I think also, as mainstream investors have felt that they can engage with the space for the first time, there's a lot of questions and there's a lot of things they want to understand. So, Matt, our CIO, writes a weekly memo to investors. We put out a quarterly deck of 40 charts and data points. So we're trying to contribute more. Bitwise is not the only or most important company in the space. We're just trying to do our part to help people feel comfortable walking across the bridge. And I think analysis and research is a huge part of that.
Well, I know we appreciate it on the news side. So yeah, keep it up.
Thank you.
Anyway, thank you, sir, very much. I appreciate the time.
Yeah, 100%.
We're done.